All right, so here is that low I mentioned on the 5-minute chart. If we would have spiked up to 40.36 and took out Tuesday's high, then break down like it did here and took out that short-term low, then I would have trusted this as a shift in market structure, even though on 1-minute chart we have a gap. It's there. Yes, I seen it. I was watching it in here, but because this could have very easily ran up and hit that Tuesday high, then I would have had to use the same protocol of using whatever swing low formed from this low up to that higher high at 40.36, which didn't occur, but had it done it here, and I was making allowance for that, it wasn't until we broke below this short-term low there, and as you'll see, and I'll actually show you a tweet where I prompted everybody. I said, any other day, I would use this as an entry to go short and aim for the 40.10 to 40.08 liquidity next, which was over here. Okay, but we broke down. We had a nice little fair value gap in here ahead of the sell side liquidity being tagged, which it does, runs up, fair value gap, and bearish order block. That's a closed candle. It drops down. Now notice that this signal and this signal here forms very close, in close proximity to the midnight opening price. That's what this little purple dotted line is going across the entire chart. So there is two setups that were beautiful if you want to get in alignment with a large range day using Power 3 concept that I teach. And it moves lower. Then we have the order block, which is last up closed candle prior to this displacement coupled with a fair value gap. Mean threshold trades up into it here, breaks down, attacks sell side below here, expands lower, institutional order flow entry drill, multiple ones here. Institutional order flow entry drill is what you see when I type on my charts and annotations, the IOFED. It's short for institutional order flow entry drill. It's a high frequency trading entry technique where it just goes into and touches the candle that would create a fair value gap or imbalance. All it has to do is touch that like it does here and here. And high frequency algorithms are going into the marketplace right there. Sometimes it just goes up one tick, but that's usually what they're using the entry there. Okay, and you can thank me for that one. a lot of firms out there using that one now. So it breaks lower, sell side imbalance, buy side inefficiency, which is a fair value gap, but the classification is SIBI, SIBI. Runs up, reprices to it here, leaves it again, bounce price range here. It's not going to go back up into it again. Smash. And drifts into the lunch hour starting.